Boris, very good morning. Good morning, everyone. How are we all doing? Well, how are
Good
you
morning.
doing? Morning. How are you, my friend? Good?
Yeah, all right.
Good stuff. Good stuff. Well, I don't know if you've checked the markets yourself just yet, Boris, but I think the markets are looking pretty good at the moment. I'm optimistic of the week ahead. I think we've had some good closures in the direction pretty much that we were looking towards anyway. In a long story short, DXY strength, and that's pretty much almost confirmed across. Well, we'll get into it. We'll talk about it. So DXY, it's a bit like last week, to be honest. I hate to sound like a
Charles?
Oh, you can't see the screen.
Yeah,
Thank you very much, man. You can't see it. All right, how are we doing now?
good.
Okay, cool. Let me refresh it just so it's a bit faster. Okay, cool. So, where were we? The DXY. As I said, a bit like a broken record, but if that's what the market's giving us, that's what we're going to talk about. So, weekly order block, it's still holding. And I'll apologize, anyone, particularly to you, Boris, listening live, if you can hear a lot of building. We're having some building work doing up on our, well, upstairs basically, and they're just causing a tremendous racket. But nevertheless, I'll try and speak as loud as I can to overshadow that. So the weekly order block, it's still holding, and that's good news. And we're still getting the rejection from that. And then when we start to go down those time frames, the daily order block, also very good news. The fact that it's holding, so it means that there is liquidity in the market, and the DXY doesn't want to go or close below these levels. So then we're looking to our lower time frames. Once we have that confirmation, we'll probably get it, of course, on the lower time frames first, and then obviously we'll get the daily close hopefully in our direction at some point. However, where I believe we are, we're at quite an important place in the market, and that's confirmed for me on US dollar CAD, which we'll go to next. So, of course, that 4 hour 50 MA, that is at the moment the clearest, let's say, barrier for us to really have that true confirmation that the DXY on all time frames are starting to move. So, we're going to get that confirmation first from the 15 and then on to the 4, then daily, weekly, of course. So, 4 hour time frame. Why is it important? Well, what I'm seeing at the moment, as I regret that I've taken off my 4 hour order blocks, but the most recent order blocks, what you can see is they are providing, once you're getting that push away and the order block left behind, prices coming back to those 4 hour order blocks in particularly, or in particular rather, and then giving us the move to the direction that we want. So for example here, bullish engulfing candle, 4 hour order block available, price comes back in, it goes off. So I'm looking to do much of the same. So when I can see a bullish engulfing, 4 hour order block, price comes back and price has moved away. I know it has been contributed to via the gap in the market, another one, but that's where I'm going at the moment. So I'm going to start leaving these 4 hour order blocks on to see how our bias is going in terms of is price looking to respect those 4 hour order blocks. But from what I'm seeing at the moment, it's doing a good job. The 15-minute time frame, it is being a little bit more difficult to respect. However, as we went for, I think on Friday, where you isolate an area in the market, wait for price to break above that area and pull back, for example, even if it's on the 1 minute time frame on the DXY, but so long as you're in, let's say, a higher time frame point of interest by way of, let's say, 4 hour order block, I think it's still very, very good to use as your confirmation on the DXY. So then the DXY on the 15-minute time frame now, again, we can see that market gap quite well, a lot clearer. Now, why I like the markets this morning, and I hope you guys can tell by my voice, is that we're up at these highs also on that 4 hour order block that caused price to move down to those lows. And we are having, well, we do have the 4 hour 50 MA on side to actually push price down. So, not to say that I am expecting long-term shorts out of the DXY, but certainly short-term shorts if price wants to come up to that 4 hour 50, excuse me, 4 hour order block, where I'm happy to say at the moment price hasn't reached there just yet, then I would be happy to use that DXY weakness coming out of the market, albeit short term, for a potential, let's say, GU, EU, or an AU long let's say, based on the weakness. But I do think that will be short term. And as I said, based on the higher time frames, I think we are still long term looking for the DXY to push slightly higher. Now, the daily 50 EMA is starting to curve its way down. So hopefully, at some point, when that DXY 50 EMA, let me paint the picture for you guys to understand my thought process. When this daily 50 EMA starts to pull slightly lower, like so, then that will give us an opportunity, in my opinion, for price then to actually be able to close above it on the daily time frame. What that would also mean is the 4 hour 50 MA also will start trending down. Hopefully by then we've already closed above that 4 hour 50 MA, but you see where I'm going with this. And then once we have the alignment, so long as these order blocks are holding towards the upside, once we then have closures above 4 hour, closure above the daily, then we have a clear target all the way back up to that weekly 50 MA for the week, or this could even be into next week, to be honest. But regardless, I do see a really nice trading range on that 4 hour time frame. And long term, you see the process, what I'm anticipating here. So across the cross pairs, I wouldn't be, well, I am not surprised to see there is a little bit of a range because the DXY is the catalyst, and as that DX of daily 50 MA starts to push down, price is also at an area that wants to push price towards the upside, and then of course the daily 50 MA wants to keep price lower. So until we get that break and close above that area conclusively, then it will probably be a bit of a range bound market, but we'll see how we go. We'll look for the confirmation on the lower time frames as always, and then hopefully, because we're not trading the DXY actively, just the confirmation. But once we can have that long-term confirmation as well, I think then we're in for the long term, potentially even on UJ longs, which I'm still excited to hopefully get a move into that. So that's the DXY for now. Happy to use that as confluence short and confluence long. Now, I did say US dollar CAD. So let's go to US dollar CAD. Right, so US dollar CAD in particular, I like it on the four, but we'll explain the weekly just for a moment. So weekly time frame, weekly order block up at those highs, weekly 50 MA, of course, will want to push price slightly lower. But as you can see, price is a large distance away from that weekly 50 MA, and that's really the gap that I'm looking to. No, that was UJ I was talking about. But that is the what I'm looking to fill. Why did I want to go to US dollar CAD? Well, never mind. Um, US dollar, okay, that's for the reason why. So looking at the potential that the DXY could have a little bit of a short-term weakness coming out of that market, let's try and understand why. So we've spoken about the date, the weekly. There isn't any weekly order blocks to the lows that would want to entice me to take the long. However, on the daily, I think it looks very nice. We had this daily order block down at these lows that in the immediacy we was looking for price to turn around and then get that push to the upside. We waited patiently for that boss. I think a couple of us, I certainly took US dollar CAD longs last week, waited for that break of structure. Price came back into that 4 hour order block. Lower time frame break of structure is a really nice looking position for the US dollar CAD long. So why not see if we can manipulate? And that was that here somewhere. Yeah, somewhere here. Judging by this lower time frame Gambox, I definitely would have taken a trade on US dollar CAD. I am sure about it. Nevertheless, as we're speaking about DXY immediate weakness. So US dollar CAD on the daily time frame, we're now in that daily order book. I know it was from last week, but again, look at the rejection coming out. This is what we want to see coming from those higher time frame order blocks. That's why we don't necessarily look for immediate positions. Judging by the wick price, of course, pushed slightly higher. The fact that price then closed lower gave us a bit of a lower time frame push to the downside. And then here we are, still within that daily order block, have the daily 50 MA supporting our position short. Of course, we can understand now based on the fact why this could be a bit of a short-term short because the 4 hour 50 MA now is being respected in the opposite direction towards the upside. However, what I like on that 4 hour time frame is I believe now we're starting to get a bit of confirmation. US dollar CAD, we were waiting for that confirmation before looking to go long, and we understood that our range was quite shortened because at this stage in the market, price was, where's my pen? Price was respecting that 4 hour 50 MA beautifully, meaning that who are we to look to trade against that 4 hour 50 MA? Meaning that that was our target initially. Now, the fact of the matter is we've finally got a conclusive, really nice break above that 4-hour 50 MA, and now we're looking for price to be driven back down into it for what I can foresee, just basics of price action. I'm not making it up. Lower lows, lower highs, lower lows, lower highs, lower lows. So here is that key structure point, and now price, of course, is coming up into that key structure point, looking for a potential move out of that area. So come London Open, I will be looking at US dollar CAD, potentially immediate shorts if I can have that lower time frame confirmation. I know I always say nothing in a hurry, and it definitely isn't going to be a position in a hurry, but as I said, it is going to be, in my opinion, a short-term position, US dollar CAD shorts. Managing it quite well. I don't think you need to manage it aggressively down to the 4-hour 50 MA. And then, in my opinion, potentially after, because we don't have a clear higher high out of this area, I do foresee then that price may then want to roll back down to this area where again we'd be looking to use the DXY strength out of the market to take US dollar CAD right back up. Ideal scenario, what we would love to see come even next week is that price has finally broken above that daily 50 MA, above that daily order block, and now price is up here, and then we start to trend in the opposite direction. So as you guys can see, we were trending beautifully down on US dollar CAD. We have almost stopped that downtrend. So the train isn't necessarily on the track in the speed that it was. We are seeing a turnaround, not quite fully confirmed based on structure, but certainly based on the EMA, which is always a really, really good sign to anticipate that there could well be a turnaround in the market. So, 15-minute time frame. I don't have any 15-minute order blocks up at the highs, unfortunately. Well, let me just double check because I was half asleep whilst marking these charts this morning. Yeah, so nothing on US dollar CAD up at the highs. Of course, there are some areas down at the lows, but what I'm quite excited to do is take a short position. If not on US dollar CAD, then there might be something elsewhere. So what I would like to see coming out of the market, of course, the first confluence is to see if we can have Asia broken. That always tells us what the market wants to start doing in the immediacy. So the best we can have is some nice structure points in the market broken to the downside. So what I am seeing is this area just here. The downside that we have is, of course, when we do get those breaks of structure points, we're then running into our 4-hour 50 MA, which is then our very good morning, Rob. Down into the four. Good morning, Rob. Which price breaking structure would push us down into that 4-hour 50 MA. So then when price comes back up, I wouldn't really be looking to take this in the immediacy because what that could be based on the DXY, we'll have to double check if the DXY is now looking to go long. But what that could mean is, of course, we're now bouncing off that 4-hour 50 MA with the potential to make that higher high. So in an ideal scenario, what I'd love to see is price just break Asia, come back to these session highs, give me a bearish engulfing candle, and then guess what? I can start the process by way of 15-minute order block. Bearish engulfing candle happens, 15-minute order block occurs. That bearish engulfing candle will then break those lower time frame 1-minute breaks of structure that actually push price up to this area in the first place. Here's the bearish engulfing. There's a 15-minute order block, lower time frame break of structure, and then that'll be a nice looking short down to the 4-hour 50 MA management, or even beforehand, since there is an easy place where we'd like to put our stop loss. In my opinion, look, we're up at those session highs. But again, as you guys know, I'm not looking at this as a retail trader where I'm seeing double top, triple tops, quadruple tops. I see that as liquidity. So allow price to do what it wants to do first of all. I would definitely suggest waiting for that bearish 15-minute engulfing candle. Boris has certainly seen it happen from session highs, wick imbalances. Once you get that bearish 15-minute engulfing candle and you can start building up that foundation, I believe you're then in a good position to short, even if in this instance it would look a bit like an immediate type of reversal position. But we have to understand we are trading from that higher time frame daily order block. We have the support from the daily 50 MA, and I think it looks nice. We're not going to be complacent and believe that the short could roll all the way back down here. We're going to flow with the market and understand that price on the 4-hour is now in the beginning stages of printing that trend towards the upside. respecting that 4-hour 50 MA. So I like US dollar CAD a lot. If it doesn't provide me with the entry criteria, then I'll simply skip it. And it is what it is. I think it could be a very fruitful week. Just looking at the DXY, to be honest, I like the fact that DXY could have the elements to roll back and the elements to roll forward. So we'll see if we can use that in both scenarios. If we can't get the short, then for definite, then of course we'll just be looking for the longs. So that's where I'm at the moment on the DXY. Let me see where my alerts lie. So I want to have alert with price break in Asia at least. As I said, once price starts to come down into that 4-hour 50 MA, we'll have to have a bit of more of a double check of what's going on because I'd hate to jump into a position that has bounced off that 4-hour 50 MA. We know the 4-hour 50 MA is a very powerful concept, particularly when we can see prices respecting it. It has done it previously, broken above. So why do we believe that it may not respect it again? But that is US dollar CAD. I like it. Let me see if I can put that in the favorite column where everything's in the favorite today. Everything is up for it, in my opinion. So that's US dollar CAD. Let's talk about UJ because UJ again, another very, very, very exciting looking pair. Weekly time frame, not too much to speak about on the weekly, to be honest. Just the fact that the weekly 50 MA is slowly making its way back up to support our position long. But to be honest, I'm not really concerned about it. I would take US dollar JPY longs even without the 50 MA supporting the position, so much as I can see how price is reacting on the other time frames. More importantly for me, daily time frame. This daily order block, I haven't amended it. I just like the fact that price is respecting it and the fact we're getting those wick rejections out of it, telling me, hey, Charles, look in this area. For whatever reason, we're failing to break below. So if I can see a pattern or a break of structure towards the upside on the lower time frames, pull back, then I'm definitely looking to take that long position in line with the fact that we're not breaking below. So we should start to make some moves to the high. Like on, blimey, why does my memory always do this to me? US dollar CAD. We do have a bit of traffic that we're running into. A lot, to be honest. Daily 50 MA, price is respecting it to the downside on the daily time frame. So, of course, trending into it, we are going to be expecting a rejection out of it. So for US dollar JPY, first and foremost, I want price to pull down as low as it possibly can to give me the range back up to areas where in which I'm expecting a rejection. Now, the question you're asking, where else is the rejection? 4-hour 50 MA, and a sub question to that is why? Well, look at price action. It is respecting that 4-hour 50 MA. It's unfortunate, but that's the strategy, and you can see quite clearly it's working. Therefore, again, telling me don't look for longs immediately. Understand if the DXY is going to roll to the downside ever so slightly in terms of the DXY weakness, then what that should mean is US dollar JPY start rolling to the downside as well. We're looking for those confirmations before looking to go long. So daily, that's discussed. Want to be taking that towards the upside. And the reason why I wouldn't be looking to take shorts is because building up my perspective from those higher time frames, for me personally, the daily order block that I haven't put in, there is one just here. So I'd be happy to take shorts from there. However, looking at where are we? Oops, sorry, team. Let me just go here for a second. Good stuff. So I'd be happy to take shorts, but from up at these highs, and I don't believe there's any reason else to take short positions because we know that, well, we are looking for the longs out of that daily order block. Therefore, the shorts, well, we'll talk about the shorts actually. 4-hour order block. We'll start the process. We'll start the process with the shorts. So 4-hour order block. The question is, why have I put that order block in the market? There is technically, let's be honest, there is a daily order block here as a result of the fact being a bearish engulfing candle. So higher time frame, we've got the daily, and as you can see here, if you check out my top right hand chart, as I put the cursor over the daily order block, you can see where we are. Previous weekly highs. Okay, I'll double check myself and let's start building that bias up for shorts. So refined within the daily, we've now got a 4-hour, and that 4-hour order block is by way of this bearish engulfing candle. The only reason why I'm not too excited is because that bearish engulfing candle, although it's a great candle, it only just pushed back into the daily order block. So therefore, shorting into a daily order block that's giving us clear signs that we want to long out of it, It's not really giving for me higher probable positions. If I got the range down to the into the other area, or at least the area in which that I'd be looking to take the long from, then for me it would be an aggressive short position, just like on US dollar CAD. Manage it aggressively, get break even sooner rather than later, and pretty much just understand that it is a short position against the overall directional bias. So that's fine to do. Now, if I superimpose this 4 hour order block on the lower time frame, i.e. the 15, where's that coming out at? Okay, up at those highs. Before I bring up the 15 larger, just want to have a look. So where is the range there? Okay, fair enough. It looks okay. Let's go to the 15 and see if we can marry up the bias for a half decent. Oh, nice. Okay, I must have been asleep if I missed that. Okay, so we're fine within the four. That remember that's from the daily time frame. Now we're on the four. We're on the 15, but you can see the 4 hour order block here as well that we've just discussed. Couple of nice areas. So we'll go with this one first and foremost. 15-minute order block. And again, it's just telling us confirmation before you want to take that position. Just going to make this slightly bigger so I can see it clearer. Where are we? So that's definitely valid. That's also available. So let me pop that one there instead. Make that smaller and place myself an alert here. Cool. Why am I looking to do that? Well, I'm seeing something like this first and foremost. Good. So, sorry, I will speak out loud in a moment. Just getting my thoughts together because I really didn't see the short. I'll be honest. Okay, so shorts. Are we supported by any EMAs? Yes, we are. 4 hour EMA, also the daily 50 EMA. So actually, forget my bias about the DXY and all that stuff. US dollar JPY looks half decent for a short. It does indeed. However, looking at the current price action and what's going on, and what I mean by that is in the immediacy here, we are bullish. Therefore, gonna really want to see some signs of, well, some breaks of structure to have that confirmation for me to look for the short. My chart's looking very crowded because I was only long bias, but let's have a look to see what we can do. Alrighty, so price starts trending up into the area. Best case scenario, the most recent higher low is excuse me, pull back into an area of interest. That should leave you with a 15-minute order block up at the highs as a result of that break. If it has come by way of bearish engulfing candle, if it's just a bearish candle, then you're more than likely only going to have an order block on the 1 minute and the 5 minute. Therefore, for me, you'd want to have a little bit more confirmation, perhaps another 1 minute break of structure after price has entered into your 1 minute or your 5 minute order block. However, if price leaves you with a nice 15-minute order block after breaking structures, as I've illustrated here, then what I'd be quite inclined to do is take the short because, like Boris has probably heard me. Sorry to use you as an example all the time, Boris, but you're probably the longest serving member in here. When I have my confirmation already, which is no, what I was leading with was if I take this short position, I can't really do much else because if I'm wrong, I don't mind being wrong because I'm that wrong. Because I'm not going to do anything else in this area here. I'm not going to be looking for any shorts here. I'm not going to identify a bearish 15-minute engulfing candle here and then look for a short down. Here is my only opportunity based on my higher time frame bias, based on the fact we've recognized as a daily order block, refined it down, support by daily and 4 hour 50 EMAs, refine that down. There's a 15-minute order block. If I wait for all of that and I respect my analysis to that degree, and I take a short, let's say, without waiting for further confirmation after this bearish engulfing candle, we've got breaks of structures, leave me with another 15-minute order block. I'll be honest, guys, as soon as I see that, I'm going to set a limit order. I don't really understand why I wouldn't, because that is a position what I want to be in. Of course, you could wait for further confirmation, trader dependent on your risk, how risk adverse you are. But for me, there are some times, and I know it sounds glass half empty, there are some times where I just don't mind taking a loss, particularly when the trade looks so good. If I could take a loss when a trade looks like that, then that for me, that just is what it is. I mean, I don't even think twice about about trades like that. So yeah, I like the long, excuse me, well, I like the long, but definitely in the immediacy, I like the shorts too. And what I like is the fact that we got really nice range. We're trading with these areas, and the range really is just where you foresee price to have a decent turnaround. So initially, I'll be looking at the 1 to 3, but then the question is, well, Charles, why 1 to 3 at that stage? Because you're not going to be looking for a long at that 1 to 3 area. So why would you want to just take your position off of that area? So this is where you can sort of start to maximize your profits and understand, well, actually, I do like the long positions on UJ. So where would I want to be taking those long positions from? Here would be a good area to understand that price could give us a reaction from that because, of course, higher high, higher low in and around this area somewhere. We can't really foresee where as a result of this bit of a gap. But the only, actually, is this a 15? Okay, yeah, it's definitely here then, for example. So after that higher high, higher low, we've got that higher high. So therefore, when price comes back down to this area, this remains a bit of a key, well, not key, but it's a structure point nevertheless. So at a structure point, I'm expecting some form of reaction. It's pretty much as simple as that. And then when I look at my risk to reward, I'm definitely going to be happy with a 1 to 3 or anything above, even closer to a 1 to 5, 1 to 6. Happy days, right? So yeah, if I can understand prices trending up, wait for price to give me that bearish engulfing candle, that will safeguard me, hopefully, against the fact that I do see a bit of a double top coming up here, which would make sense, particularly because we got that daily 50 MA. Once price reaches for that daily 50 MA, I'm hoping that still within a 15-minute candle, and most certainly within a 4-hour candle, not to break and close above this 4-hour order block, then we just get that, well, we call it manipulation, but we safeguard by waiting for breaks of structure. So let's say even the worst case scenario, price goes through this 15-minute order block as it's coming up, and then we're thinking, oh no, price hasn't respected the 15-minute order block. But what's most important, in my opinion, is the 4-hour candle respects this 4-hour order block. Because the moment the 4-hour candle closes above that 4-hour order block, in my opinion, the short then becomes even more short term, and then we're looking for that. So providing we respect the 4-hour order block, I don't really mind what actually happens to the 15-minute time frame. 15-minute time frame, in my opinion, I would like it to break this area, and I'd like price to start trending up. And the majority of traders then I say, okay, breakout, they're looking for those long positions, and then we get that. That's our move. That's our move. That's the move. And that's just like so. So yeah, the markets are looking quite exciting in my opinion today. So that's US dollar JPY shorts. I like it. Of course, the longs, a couple of areas. I don't want us all to get caught out on those areas. And what I feel would be best to understand where and when is using that DXY, particularly the DXY 4-hour order book. So if I head back to that for you there, Rob, here is a DXY 4-hour order book where we were talking about just now before you arrived, that price is seemingly respecting the 4-hour order blocks. And look at the move now. So I guess those US dollar CAD shorts, well, we'll have a look. We'll see. And UJ shorts, we'll see. But yeah, I don't see any other places in the market to look for US dollar JPY longs. Therefore, the DXY, it is, of course, in my opinion, gonna roll back a bit shorter, if that makes sense. So nothing in a hurry. You can see my alerts are well and truly down here. So let's see how we're gonna get on. So that's UCAD discussed. We've discussed US dollar JPY. Let me go into a little bit more detail on how I'd probably look to take UJ. Of course, down at these lows, I believe that is the best place. 5-minute order block refined, and that allows us to take into consideration previous weekly lows. I don't think we should be, well, I don't think personally long positions, well, no positions need to be taken in a hurry because we understand where I believe, well, I talk personally, because I understand where I believe price is going, that often would want to push me towards taking positions, let's say sooner rather than later, i.e., 1-minute breaks of structure instead of 15-minute breaks of structure, and then moving to break even slightly more aggressively by way of the imbalance in the opposite direction. But I do feel as a result of having a lot of areas here in the market, as you can see, confirmation. So the way that I would look at taking UJ longs here Well, to be honest, I really wouldn't want to because how I'd need to take that is I want to see a break of Asia first and foremost. This 15-minute order block, and again, it's time and place where you get that confirmation. So for example, let's paint it here. If for me to take a long position here, I know I want to see price break Asia and come back. Because if price just comes straight back down and I just wait for a bearish engulfing candle, I I now am trading straight into that daily order block to look to go short, right? Now, if price breaks up and pulls back, but doesn't then, well, let's say price breaks up, pushes into this area, and then comes down here. Now I know I don't want to take a long from this area because, in my opinion, then the short that I want to take has materialized. Um, wait, hold on. The shorts. So up at this area, yeah. So we got two processes in one. If we break Asia and come back here, then I would love to take the long position up because this order block has shown me its direction. Now, if price pushes further higher into here and then price comes straight back down, then I'll be a little bit more concerned because I know my higher time frame directional bias is going to want to push price slightly lower based on the daily order block as well. So we're now trading out of that daily order block. That's just my thought process at the moment. So as price reaches those areas that you're looking to get that maximum rejection out of, I am then less willing to want to take a position from here, and I'd like to have price come further down lower. Because for me now to take this position long, if price pushes all the way back up, what I'd want to see is price fully break up and close above the daily 4 hour 50 minutes, close above the 4 hour 50 MA, close above this 4 hour order block, and then we'd have the full confirmation from this area. However, as it stands, I want to take it from as low as possible because I know on the daily time frame I've got a more range to this daily order block just here. And if I put that daily order block on the chart, so stop confusing me, you now see what I mean. So the moment it starts pushing into this daily order block, I'm now feeling that, well, any long position I take from here could just be rejection from that order block and actually push price slightly lower. So it's one to definitely take into consideration. However, I feel that down at the lows is going to be best. But I'm active today and I'll let you guys know what I'm up to. So that's UJ. Either direction is great. The lower, the better for the longs. And we'll see if the shorts will materialize. GCAD, 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 GCAD. In fact, let me put this in order so I don't forget what I've done. So we've done DXY, we've spoken about US dollar CAD, no illustrations on AU, so we've not spoken about AU. UJ, we've spoken about UJ. GU, GU. Okay, we haven't spoken about GU. Let's start with GU. So, GU, weekly order block. Price is in that area. Wick and balance of the high. We tested it last week, and no real rejection out of it. Well, certainly on the 15, it looks like one. However, let's start with the daily. Daily order block, haven't amended that. This order block over here is still holding nicely. I love to see it, hence why it's still on the chart. Now, we're getting a hold up on the daily time frame, in my opinion. Now, can we seek to understand why? Well, yeah, just like on all the pairs that we've discussed, although the higher time frame directional position wants to take us in our favored direction, we have a daily order block that's pretty much killing the party. We can see that on the daily and the weekly that order block we want to take shorts out of. But as a result of this bullish engulfing candle on the daily, it's left us with a daily order block. And price, of course, now wants to reject the daily towards the upside. And it wants to reject the daily refine within the weekly towards the downside. Hence why now we're getting a bit of a range. So bit of a tricky one. I know we're traders who want to trade, so of course my best type of advice is wait for a daily close out below, excuse me, below this daily order block, below the daily 50 MA, and then once you've got that, you can see exactly what it will look like on the daily. So you'd have that higher high, higher low type of scenario, higher high confirmed, that's daily candle closing bearish will break all structures here. Simply look for the low, excuse me, the pullback after the lower high for the lower low continuation. So that's forecasting well into advance. And as I said, I know we're traders, so what would be the best type of scenario that I'll be looking for on the lower time frame to see if GU is a potential? At the moment, so EMA, is it doing the business? And I hope you guys remember last week I spoke about when the EMA starts going through price action, particularly on the 4 hour, that will give me the sign that we are just ranging like so. However, I can't really, it's not giving it just yet for me. So I'm still inclined to use that 4 hour 50 MA as we would do normally. But on the 4 hour, it's not so explained at the minute. So the 15-minute time frame for me would be a better guide to understand what would be the best direction to trade it. Because actually, we're simply within a daily range where a range hasn't really been confirmed. Therefore, we just have a nice trading range up, trading range to the lows, and then if we can get those breaks of structures in either direction, then we're happy to take it either way. So let's go to the 15 to see if we can build up a bias for the favored direction. Before I do so, if we got a higher high here, higher low, failed to make a higher high, we've not made a lower low, no higher high. So yeah, there's not much going on at all. But as you can see, what's happening with the 4 hour 50 MA? The 4 hour 50 MA is keeping price held within that kind of zone. And I don't like to complicate trading, but I hope you guys can see it. So what we're expecting as that range develops, hopefully then we get a break to the downside, pull back into the area of interest, and we can look to short then down into that 4 hour 50 MA. So that's the thought process again, but let's see what we got on the 15-minute time frame. Where are we? Where are we? Where's my cursor? There. Cool stuff. So 15-minute, where are we? So we know we know we can train within that training range. Where's that 4 hour? Is there anything at the 4 hour? No, no 4 hour order block that because the what we could look to do, so we could place that there and understand has price broken or closed above it previously. No. So let's just make that trading range nice and clear for us all on all time frames. Okay, it's just there. Fair enough. Cool. 15, back to the 15. Where are we? So, where's the EMA? Again, 15-minute EMA is not something I take into consideration at all when I'm trading. But if it starts doing that through price action, then it's a good sign. So I don't have that just yet, in my opinion. So what do we have? Bear with me, guys, 'cause I haven't looked at GU much. It was pretty much a no for me personally, but let's have a look at it to see what's going on. Right, 15. Structure and price action. Can I decipher it? I can't, to be honest. So for me, it is a range. I've got this 15-minute box here that I've just remembered that I've put. Definitely a range. So in terms of trading range, you guys know no need to be the first in a range trade. Understand that the lows and the highs of the range will probably look to be manipulated before price then goes in its direction. We all know, well, we've all been there before looking to trade ranges as a standard retail trader. We're looking at double, triple, quadruple tops. Straight away, we're looking at short positions. Then our position gets liquidated and then off it goes in the direction that we want. So if you're going to look to take the range trade, just wait. You can see these double, triple tops there. Wait for price to break up. Look for the move that will come out and then straight back up. 15-minute bearish engulfing candle. Start the process again. 15-minute order block. Wait for price to pull back up into that area and look to short and manage your position aggressively if you want to take a range trade. I think there's enough in the market that we could potentially avoid it. But that's how I'd be looking to take it. I wouldn't be looking to take any immediate shorts at the moment on GU as a result of that. Of course, I can see this 15-minute order block that's still available. And to be honest, that's given me all the signs to understand that in this area, although it's a refined 4 hour order, I got that right? Yeah, a 4 hour order block that I've placed in the market. If I just get that out and actually understand that when you see an order block above, let me make that bigger. Sorry to jump through. It's an exciting morning when price is looking like this. When you see quite clearly these areas in the market like that, and then you have that order block or order blocks above, it's almost inevitable to forecast price to just drive straight through those areas where you know people are going to be looking for shorts in and around that area. Not drawn to accuracy, but you see what I mean, right? They're going to say, well, price came into the area, gave an immediate break of structure, and then price is back into this area. So as soon as price comes back in, there will be retail traders looking for immediate shorts. That wouldn't be us. Expect that to happen, then expect price to drive back down. Everyone gets excited in the retail world, not to shit on anyone, but then that's what really will most likely occur. Stop out, and then we'll be there with our standard strategy. So that's GU. To be honest, I don't believe GU needs to be traded because looking at the fact, well, just now anyway, for me personally, and I'll explain why. We understand, of course, DXY long-term strength. We understand DXY short-term weakness, which if DXY short-term weakness occurs, of course, that's when we'll have price driven into these areas. Then DXY strength, of course, then will come into the market, but that's I believe as a result of identifying a bit of a range-bound market on GU, well, why not look for a different cross pair? Or why not just trade US dollar CAD longs or UJ longs that looks a lot cleaner and clearer on the lower time frames? Because if you look at this now, I don't believe you can say we are clearly bullish or clearly bearish. And it's always best to trade alongside price action and structure that you can understand. And for me, I can understand it, and my understanding is that there is no clear trend in the market. So, with that said, shorts would be favored as a result of the DXY strength to anticipate coming out the market. But I think what would look a lot nicer is at least we got a nice bearish close below the 4-hour 50 EMA. We had a nice daily close below that daily order block. We don't need to be the first of the party. Trading is long term. Wait for price to start breaking out of nice clean areas, pull back, and there is a good short. If you're desperate to trade the range, then I would look for shorts preferred. That's GU. EU. Have we spoken about EU? No. Let's go to EU. Weekly time frame, much like GU, higher time frame, weekly order book. I've kept it on there again. Why? Because price is failing to break above it, and all I'm seeing is wicks being thrown to the high, suggesting to me that I should be looking in a particular area to understand if I can grab that wick imbalance liquidity that pushed price down before. So once price comes back into that area, why would it not look to push price down again? That's all I got for the weekly time frame. Good weekly range down to the weekly 50 MA. It is what it is. In fact, yeah, that's it. Nothing more needs to be discussed on the weekly time frame. Daily time frame, still again, haven't moved or haven't added an order block. There hasn't really been an opportunity for me to do so in the short direction. Just using the one refined, the only daily order block refined in that weekly time frame. And here we are. Again, prices failed to close above that area. Wicks to the high being thrown, suggesting why I should be looking in those areas to look for a short. Daily time frame, good range down to the daily 50 MA. That's always good to know. And in terms of the daily time frame order blocks, well, we've got that bullish candle that allowed us to select that daily order block. Then the question is why? Well, if I'm completely wrong and price is looking to go bullish long term and the DXY is looking to short, then that could be, well, it's definitely not. But if that's a high, here's a higher low. We're in the makings of a higher high potentially. We have this order block, then price should be looking to reject this area. So again, like on GU, we recognize that we have range down to these areas, but with that said, we can still expect a rejection out of those areas. Anyhow, more importantly, 4-hour time frame, what are we seeing? Can we identify trend and price action at the moment? So here's, in fact, before I make that statement, let me go back to GU, GU, EU. What I'm trying to identify on the 4-hour time frame is what looks better, GU or EU, to start building that bias. So for me, yeah, I'll ask it rhetorically and I'll draw it as well. So GU, I said range, favored shorts from the range. Is it really worth it? Can't understand price action too much on the 4-hour then. So if we say higher high, higher low, higher high, There hasn't been a break of structure low. So technically, any time prices in the area from here to this point, we are still bullish. We have to understand we're still bullish. And then we have the support by the 4-hour 50 MA. EU in contrast, let's have a look. And before I do that, have I used enough price action? Yeah. EU, don't know if you'd agree. So if I start this slightly earlier, we can say a high created in the market, a low created, lower high, lower low confirmed. Oh yeah, so high, higher low, higher high. Yeah, to me, there's no favorite. I was thinking if I was to overwrite that like that, there'd be a bit of a difference. But depending on how you look at it, I mean, you could say that is just a break of, well, if I draw it accurately for a start, had a break of structure, longer term, low, lower high, lower low. Let's see if I can do the same on GU. I'm just not seeing the break of structure as I'm seeing on EU. Hmm. Let's take it for what it is. EU, 4-hour time frame. Couple of good areas. 4-hour order book right up at the high. So of course that's the best position in my opinion to look for shorts out the market. Wick and balance still available for us to look to manipulate if price wants to get up there. And of course with DXY weakness short term of what we're expecting, that may well want to push price slightly higher into those areas. DXY strength comes out, EU slips. So that's what we're anticipating. However, price action on the 4-hour EMA. Is it, can I identify it just yet? Uh, Trying to identify is this still in a range as well? So clear highs in the market. Let's put a box around it. So we can see clear highs being thrown wicks up to the highs, clear lows. I don't want to force a range if it's not there. So that would start, let's say, from around here. Nah, I don't think that's a range just yet on the 4-hour. We're going to still roll with higher time frame directional bias. And let's see what we got. So 4-hour up of those highs, refine within this weekly order block, also refine within that daily order block that price is still holding. Here we are. No 4-hour order block for me to, well, no other 4-hour order block for me to manipulate as a result of price pushing towards the upside. So we are getting order blocks that we are able to put in the market to take price higher. But at the moment, I believe the higher time frame for me, I won't even be able to take a long anyway in terms of DXY short-term weakness. I can't take a long because my long from this daily, excuse me, from this 4-hour order block, supported by this 4-hour 50 MA, I don't have enough range into that weekly order block where I am, of course, looking for a price to come out of that area. So I know I can't take a long position. So let's see if we can build up a better bias for shorts. I feel like I'm waffling a bit here. Higher time frames, lower time frames. So up at the highs, we have that 50-minute order block. And to be honest, until price starts to break structure points, in particular, okay, let's say price comes up first and foremost, then you guys know my preferred way. Bearish engulfing candle, look for the price to come back in, print a new 15-minute order block, lower time frame confirmation, look for the short. The reason why, again, I'd be happier to take that aggressively, i.e., not wait for clear structure points broken in the market, which I must say would be the better case scenario. But because by the time price gets up here, that's US dollar weakness, I would like to anticipate that the DXY is down at these lows. Now, again, if I am wrong and the DXY doesn't give us a reaction from down at these lows, well, I can't really do much better. And if I can support that by the fact that I am in the best case or the best place, in my opinion, to look for a short on EU, then I may well not necessarily wait for the better setup, which would clearly be a break of 15-minute structure. But what I am happy to wait for is at least as price starts trending up, I get that break of structure on the 1 minute, but that is supported by a bearish engulfing 15-minute candle that, we must add, has come out of a 15-minute order block that we've already done or already looked to refine. So we have those areas. So again, so long as it fits the stop loss, which that would be my only um, caveat to that, because yeah, that's massive. And I'm not going to be taking using the stop loss of even 20 pips for me on EU is a little bit too big. So what that's telling me is as price comes into this order block, I can't do anything in a hurry. I have to wait for a refined area because I need a stop loss that is at least, well, at max 15 pips because the range down to those areas. I mean, it looks good there, but just by my own statistics, I know that I'm more likely to be able to manage my position that makes sense financially as well, not just based on the fact that price is moving. So while I'm on that topic, if you enter a position aggressively, but you have a massive stop loss, moving to break even, it doesn't allow your price any breathing room. However, moving to break even when you've got a stop loss, I know I'm talking things that you guys probably already know, but just to emphasize it here with the illustration, if I'm able to have a stop loss of 15 pips, you guys, of course, can see that when I move to break even, it means something, not just financially, but also gives the chart breathing room. If my stop loss is too big, financially here, it makes no sense either. But I know it makes sense on the chart to have a bigger stop loss. So what that's telling me is I need to wait for my stop loss to be in a position or wait for price to give me the availability to have a shorter stop loss. I hope that makes sense. I feel like I'm still half asleep, to be honest, team, but I hope that makes sense. So what that means to me is when price comes into that area, I can't say that immediately. Long story short, I need to wait for price to do something first of all to then allow me to have a stop loss that actually makes sense. 10 to 15 pips for me, EU, GU is definitely sufficient enough. Yeah, on those pairs. So that's what I'll be looking for. I'll keep that there to remind myself that I need a stop loss of that size, but I don't really need reminding, to be honest. And that's the short position. I like the shorts, and we can understand why prices want to come up in there. The US dollar weakness. We can understand why prices want to drive out of there. DXY strength, and we're using as well as that our higher time frame directional bias to come up with that conclusion anyway. So EU shorts, I like it. EU longs, no thank you. I can't personally trending into that higher time frame weekly order block. So that is EU. Do I have enough alerts on the? Yeah, we'll go EU. Another scenario, let me just give you guys. If we get price breaking structure now, breaking the 4-hour 50 EMA, breaking this 4-hour order block, and then price wants to come back up, then I will look for a short from this area after confirmation. So it's all about being dynamic. At the moment, as a result of this, let's say, session high, not doing anything, it's only a Monday. So we have to wait for price to develop ever so slightly before using previous areas. Hence why up here, wait for something. Hence why if we get a break, wait for something up at the highs. But yes, I will take a short position from here if we do get a break of structure from this area. And again, it would be in line with DXY strength coming out the market to start pushing price lower. So I'd be inclined to take a short from either area. And with that said, that's why I guess I had an alert at this session high area and not just waiting for up at these highs. So I hope that makes sense, team. So that is DXY, UCAD we've spoken about, UJ we've spoken about, GU we've spoken about, EU we've spoken about, AU and GCAD. Cool. Let's go to GCAD. GCAD I like. Let me come up and try and remember why I like it. So yeah, there was nothing on the weekly time frame last week. Ooh, I missed that now. That's quite actually no, that's not annoying. That kind of supports the thought process. Only for longs, however. I'm not going to put it in just yet. Maybe you guys have seen it already on the weekly time frame. I'm not going to mention it, and I'll put it in right at the end. So weekly time frame, weekly 50 MA, you can see that price is now bouncing off that weekly 50 MA and the weekly 50 MA is doing its job. So I'm expecting as soon as price wants to come back down to these lows, I'm going to use the previous history, i.e., previous weekly history, that we are going to look to reject that weekly 50 MA. Are we going to reject it immediately? Probably not, based on the fact that you can see the wick just underneath it. So we'll look to highlight that wick as a wick imbalance and see where that lies in terms of lower time frame refined areas, and then we'll go from there. So there's a wick imbalance. Let me put that on all intervals for us to see if it marries up nicely with the lower time frames, at which would probably be the best area in the market. So let me explain my thought process now. We came into a daily order block last week, and well, the whole of last week, let's say, and we had that range on the daily time frame. And I was looking to understand, could we see price break out of that range, pull back into the area, and look for the long position? Unfortunately, what you guys can see, I waited for the break. Price didn't pull back into the area, and unfortunately, it went. It happens. However, all that does is confirm my areas for potential longs this week, because the area is still available. And even better now, as a result of price pushing up from these areas, we would have had, no, that would have been the kind of, um, what's the word I'm looking for? That would have been the hurdle. We can see that price hadn't closed above that daily 50 EMA. So, of course, we'd be trading into that daily 50 EMA, and therefore promoting quite risky positions, right? We'd only be trading the range, let's say, of the previous daily candle, having to move to break even quite aggressively, because the daily 50 EMA at these stages was in fact pushing price lower. So the good news is we've had that daily candle closure above. We can see that nicely. Of course, waiting for price to pull back. But anyway, long story short, all EMAs are now on side and favorable for long positions. When I got to the chart this morning, I was looking at shorts. Where is price action? Just here. So I am happy to take longs and shorts, but I think as a result of something that I've now just seen, that now suggests to me that I can't take the shorts personally. Do I have the range? Now, the reason behind that, you guys know, weekly order blocks, of course, I'm expecting price to want to push out of that area. Based on the weekly 50 May, it's actually supporting that bias as well. So would I really want to be shorting into an area where I'm looking for long-term longs out of? I can if I have a good enough range to move to break even. And judging by this area, or judging by this range, I do have enough room to move to break even. So I still like the shorts as well as the longs, but I think the longs based on the higher time frame makes a lot of sense. Let's have a look to see why now on the 4 hour. Okay, so oops, sorry. Uh, can you tell the builders to close it down a bit? All right, thanks. 4 hour, or sorry guys, it's just havoc in this household. 4 hour time frame. Couple of 4 hour order block areas. Now, the best, of course, would be down at the lows. Remember, we put that wick imbalance in the market with nothing in and around that area, just price roaming back to the range. Let me go to the 15 to see if it makes sense as well. Um, daily 50 EMA, where is the wick imbalance? Hmm. It's quite crowded, is what I'm feeling at the moment. Nevertheless, longs make sense, is what I'm telling myself currently in mind. I can't think with this noise. Sorry everyone. Right, Jesus. Sorry team. I'm just gonna pause this for a moment and see if I can have them turn it down for a second. Two seconds. All right, guys. I'm back with you. Apparently not for the moment. Right. Okay. GCAD, GCAD, GCAD. But let's talk about no, let's talk about the longs. The longs are better, in my opinion. So 4 hour order block. Let's go to the 15 so we can build up the bias, and then I'll have this sent out to you guys ASAP. So best area, I think here, lowest 4 hour order block, refined 15-minute order block, supported by the daily 50 MA to the upside, and of course the weekly 50 MA as well. But what that's giving me and what that's telling me is that this 15-minute order block may well not hold, because when price gets to that 15 weekly 50 EMA, and I hope it doesn't happen sooner rather than later. As you guys know, Friday is my statistically my best day, because I'm using those higher time frame EMAs as the rejection, because we've got only the close of business for the day and of course for the week as well. So in an ideal scenario, I'd want the price to come down for the short, for the longs towards the end of the week, because what I'm anticipating is price will dip below. Then we'll look for either a break of structure of the most recent lower high, or being aggressive, looking if there's anything else to the lows in the immediacy, which would be for me within the range. I wouldn't anticipate price to want to push any lower than the range, but certainly I would anticipate price to want to break that weekly 50 EMA, and then I'd be looking for that bullish engulfing 15-minute candle, start the process again by way of 15-minute order block, and then off we go to the races to look for that rejection for the week to take price back up to those highs. So forecasting and hoping that that happens towards the latter stages of the week. If it doesn't, then again, I think it still would be best to, well, of course, look to trade from this refined area, but that wouldn't be a position where I'll be looking to say, okay, I'm just going to wait for a lower time frame, 1 minute break, and then take the long. I think it would be a bit of, I think it would be best to be a little bit more cautious, particularly when that weekly 50 MA is so close. And the reason is, look what happened last week on that weekly 50 MA. If we were to trade directly from that weekly 50 MA, you probably would have been stopped out. So understanding when price gets there, it's going to want to find the liquidity below. And then that is, of course, what's helping us with the fact that we're using those EMAs towards the direction. So hoping that happens later rather than sooner. But of course, if it does, then I'll be looking for a bullish engulfing candle, or even better, in my opinion. Let me see what is going on with price action. So price action is bullish on the 15 immediately. So when price is starting to print down, as opposed from just waiting for that 1 minute break of structure. Wait, let me clear that up for us. God's sake. Once price is printing down, I'd want price to be broken in terms of the most recent lower high. Then we've got a first high, and then we start going off like so. So it's the same on all time frames, but I believe, of course, the time frame that you're doing it on dictates how aggressive you're going to be looking to manage that position. And just to go a little bit more into that, let's say you wait for this on the 1 minute time frame, then of course you recognize that as a result of having that 1 minute break of structure pull back into the 1 minute imbalance, then your management is now here. However, on the 15, this will still look the same, but it's exactly the same basically. But having the confirmation on a higher time frame is better, of course. So that would be both plays on the 15 and then on the one, but the 15 I would be looking for in the immediacy, because as price starts to pull down, it is of course a new week. Price could well be printing bearish, so we'd want to obviously have a break of that bearish price action, and then just understand that we're patient traders and we can wait for our setup to materialize. So that's GCAD. In terms of the shorts, now let me try and think of the shorts. The shorts make sense based on the fact higher time frame daily order block price came in last week. We had a rejection from it, and now we haven't closed above it. Hence why the fact we're looking to manipulate that. And then the 4 hour order block again, still available. Price came in, wicked out of it, and then we've had the gap. So once price wants to come back up, I see now on the 15 that we have a 15-minute available just here. And I like what oh yeah, that's confusing. And I like what has happened. Well, I don't like what has happened. If price had actually, in fact, just done something like that, then it would be great. The fact that we could then identify a break of structure, look for price to then want to come back into that area for the short, that would make sense. But because of the gap, is we can't really take that as a break of structure. So I think what would be best to understand is, or best to do, of course, best you'd have a break of this area, but then we're straight into the territory of the longs. So the shorts are, it's a bit unfavorable if we start actually printing our favored setup. So worst case scenario, which would be best, in fact, for the range for the short, would be price comes straight back up. When price comes straight back up, let me dictate whether aggressive would be good or not. I don't believe so. Therefore, for me, most aggressive type of position that I'd be happy to take would be just that bearish engulfing 15 to then start the process again and then take the short. And then of course, if price is printing up in good unison and you could have that break on the 15-minute in terms of structure and then come back, then even better. But I wouldn't be looking for just an immediate 1 minute break of structure from this area, because we zoom out, there is a better area up at the highs, wick imbalance, where you can understand where price may want to look to gravitate towards. So therefore, I think if you want to take a position and understand that any trade could be a loss, I think a good loss, if you want to discuss it that way, first and foremost, a good loss to take would be a loss that has a good formation in terms of bearish engulfing. That's the best way to journal your position, to say, well, I understood there was two potential areas in the market and I waited for 1, 2, 3, 4, 5 to be in favor before taking the position, as opposed to, well, there were two areas in the market. I took the first area aggressively, and I knew that there was an area above. I'd much rather take a losing position when I wait for all of the criteria. So that's GCAD. Let me get my alerts on there. So if it happens during the day, I'll be able to give you guys a good update. Home all day, and it's blimey, tipping cats and dogs outside again. That's GCAD. And have I missed anything? AU. Finally, AU. Then I promise I'll let you guys go. Thank you, Robin Boris, for sticking with it. Weekly time frame. Blimey, Boris and I have been discussing AU shorts, it feels like, for about a month now, and they're just not really materializing. We're going higher and higher and higher into that weekly order block, as you can see, top right-hand chart, which is actually good. When the weekly order block is so large, it is actually favorable to take it from as high as price will possibly go. As I always preach, if I'm teaching someone, I would say only look for, in the immediacy, once you've refined your areas down and you've got so many positions and you don't know which ones to take, wait for the highest if you're going to look for a short, wait for the lowest if you're going to look for a long. And now AU is actually just providing us with that by pushing higher into that weekly order block, which is good news. And the better news is price is holding. We haven't closed above it, hence why we're still going to look to manipulate that area. So that's the weekly. Good range down to the weekly 50 MA. Not much else to talk about, to be honest, on the weekly time frame. Daily, sorry for your eyes for a moment. Let's see what we have. Daily. So to be honest, although the daily's looking, let's say, if we put inverted commas, bullish, just by the fact that we can see higher high, deep pullback for a higher low, which I actually thought could have been a break of structure to take a short from this area, and we've just made a higher high. For me, it doesn't matter because higher time frame is pulling me trump in, well, giving trumps at the moment in terms of the weekly. So I am still forecasting a position out of that area, and I won't forecast anything else until we've broken and fully closed above it on the weekly. So there's nothing really on the daily to support the position short. But with that said, I'm not really concerned about what could support the position long because we're in the higher time frame order block. It's all well and good trading, let's say, a long into a weekly order block, but when I'm in that weekly order block, then there's absolutely no way at all that I could look for a long anyway. So despite my areas potentially supporting longs, I can't. The moment I simply put this on all intervals and you see where that is, there we are. I can't possibly look for a long in a weekly order block that's taken me short, I would be shot, probably quite literally as well. So it's very easy. I just have to look for the best type of scenarios for me to take a short position. Now, what do I have at them? If I get rid of that, you guys can already see that we're in that weekly order block. Clean it up a little bit. So we have previous weekly highs up at this area here. Of course, that's where the liquidity may well lie as a result of price pushing down from that area. Clear identification of the fact that there are sellers there. We can't dispute that fact. Now, 4 hour order block, 4 hour price action, 4 hour structure. I have to admit, we are looking higher high, as we said, higher low for a potential for a higher high. We didn't get it. So technically, any price action that remains between this high and this area of higher low, we are still bullish. However, we're smart traders. We can understand what we can do when we're looking for a particular direction. Understand what's going on in the immediacy. Not quite a range. I've just done it to identify that there is a clear area in the market where price is failing to break above and below. So, like on many other pairs that you'll see me trade, when we're up at an area looking for a certain position, I know what the best scenario is. Break that area, break the 50 MA where price is currently holding towards the upside, pull back, then look for the short. That's the best scenario. And that is how I would always advise somebody to look to trade. Now, because I know we're all excited and we want to trade, how can we look to trade that slightly quicker or not quicker, slightly differently? So if we look to analyze charts slightly more intricately, we've had a break of structure here. So this was the high that was created on the 4 hour time frame. This could have been the potential higher low or potential higher low that has failed to make the higher high. Now we are gauging our minds towards short buyers. So here is a clear structure point in the market that for me would be a clear target if price wanted to pull up into this area. And again, best case scenario, you can see if we break that area, what are we doing? We're breaking structure points. And you can see also on the 4 hour, if you use the 15 and the 4, breaking this structure point, we would have broken structure in the upside in the 4 hour time frame. So it makes sense to wait for that. But if price comes straight back up, and I always say worst case scenario, because it always gives you that decision, oh no, price is in the area, it hasn't broken structure, what do I do? Couple of things you can look to do. Of course, aggressive would be understand that price, of course, once it comes up, is start printing. Well, I can just draw it on what we already have. Area in the market where price is failing to break above or below. Two areas at the moment. You can see quite clearly here is a structure point. Not the best in the world, but it's a clear structure point. Therefore, for you to take that aggressively, what my suggestion would be doing, and again, it's not even that aggressive to be honest. It's understand that you've got a break of an area in the market. You've identified your directional buyers that you want to take a position from. If you've got that break, then here the entry criteria is down to you. I'll be waiting for a bearish engulfing candle because I don't believe there is any reason to look to rush on a Monday. I mean, I should say any day, but there are certain days where I will look to trade slightly more aggressively. But if you got that break of structure, price comes into this area and you can foresee you get yourself a nice 1 minute break of structure. You got good range down to the 4 hour 50 MA that hasn't been broken yet. You understand structure in the upside is going up. Then I think it's great. You'll be able to manage your trade, manage your position. Well, you should have the range to manage your position by that structure point that has now been broken. So clearly, as price pushes up or breaks that area and pushes up, there will be an imbalance in the opposite direction for sure, at least on the 1 or the 5. Manage it by here, take profits by here, or optimistic, hold it for the week and see if you can roll back down to that 4 hour order block down at the lows. So I like AU shorts. And again, using the DXY, would it make sense to look for AU shorts? I believe it would. And your higher time frame bias, again, once I put this on all intervals just for you guys to have a deeper look again, it would make good sense to look for a short position coming out of the absolute highs of a weekly order block. I think it looks nice. So yeah, they're all favorites to be honest, team. I like all of them today, and it's just alerts. Wait for the alerts to go off. have your confirmation by way of DXY, and have a good trading week, team. I'm with you, I think, all week, which is very generous of me. But since I love you all so much, then I'll trade with you guys all week. And if it rains all week as well, then definitely I'll be on the screens all week. So, team, before I let you guys go, Boris or Rob, any questions do you have, or are we good for the day, at least for
Good,
London?
good, good.
Cool. Thank you for joining, team. I appreciate you both, and you'll hear from me soon. Have a good trading day.
Cheers, Charles, and you.
No problem. Thank you very much. Cheers, Boris.